Using the information in last video, we will build upon that to show you how to use multiple time frames and trigger multiple participation groups at once. So let's get started. First, the creator of the strat, Rob Smith, this is all of his work. I am presenting it and organizing it, hopefully in an orderly fashion, so anyone can go and learn this stuff for free on YouTube, and you guys can share it around as much as you want because it's free. So in the last video, we talked about the 1s, 2s, and 3s, and the video before that, we talked about candlestick formations, such as the hammer and shooter, inside bars, and the rev strat, the two universal truths as far as entries go. And then in this video, we will cover the flip, combinations, the measured move, which we can kind of skip over just quickly since we talked about it before, the importance of time, and then a summary and live charts. So the importance of the flip. The flip is what we call the changing of the new hourly bar. At the bottom of the hour, 0030, so 8:30, 9:30, 10:30, etc. Although some trading software updates the hours at the top of the hour, we highly recommend one that updates on the bottom of the hour for the following reasons. So first, some may say the final hour of trading is the most important of the day, and that is false. The opening hour is much more important because the opening price will set your benchmark prices and setups in which we can gauge direction for the rest of the day. It is also important as not only does the US stock market open on the bottom of the hour, European markets close on the bottom of the hour, thus creating a liquidity event. And this is to say, once Europe closes, we're the only game in town, which is pretty funny. That's what Rob said in the first one. So futures and futures-related stocks, such as the weekly oil and natural gas inventory numbers, those will come out at the bottom of the hour. So every Wednesday at 9:30 CST or 8:30, or no, it'd be 10:30 New York time. The flip is important because it's the only time when a major time frame signal can be created during the day, alongside these news events that occur normally on the flips. So unlike the weekly, monthly, and daily signals that need to form and then trigger after their respective timeframes have closed, the 60-minute signals can form and trigger during the same trading day. So now, let's talk about combos. So combinations increase probability by having separate participation groups trigger others. We are always looking for a combination of actionable setups. Participation groups are just representations of different time frame charts. So the monthly chart would be the monthly group, the weekly chart, the weekly group. Therefore, anyone who has traded this month is a part of the month participation group. If they made that trade this week, they're a part of this week's participation group. And if they did it this specific 60-minute, they're a part of the 60-minute participation group, etc. So what this does is allow us to gauge what participants are doing across those multiple groups. So if all the groups are buying, we know that it's a buy. If all the groups are selling, we know it's a sell. So we look either for a combination of actionable signals where one triggers the next and so on, or once a longer term signal is in force, additional actionable signals to reconfirm the signal. So in the following example, there's a typo here, but in the following example, you'll see the 30-minute group inside and up here, 212, confirms the day and week and then ends up triggering the month way up here. So the 30-minute group starts this move for us, and that's how we enter. We take the 30 to confirm higher time frame participation groups or trigger them. In this case, confirm. So you'll see here, the inside 30 and up, when did it occur? Above 135.02. So at that point, the day is 2-2 reversal in force. So we are confirming that. When the 30 triggered, what else was in force? The inside week and up. So we are also confirming the week. So the day 2-2 confirms the week 2-1-2 using the 30 2-1-2. And then on the month, what do we go for? The continuation month with triggers the next day. Because the week is in force, we can swing because the week lasts for 5 days. Hopefully that makes sense. So this is an example of the 30-minute group confirming the day and week and then triggering the monthly group. So here, in this example, you will see a momentum hammer on the daily time frame, telling us we should be looking at that today, since actionable signals tell us we can expect price movement. And then the weekly participants, 2-1-2, are set up, actionable as well, so we can use that to trigger the week. And then on the lower time frames, such as the 5-minute, we get a normal 5-minute hammer, which confirms the day. And then we are followed up with a 5-minute Momo hammer, which confirms the week and day. So we take this fiver after that day is in force. You can see above 44340, the day Momo hammer signal is in force. 44403, that is our 5-minute signal to enter in that. And our stop would go at the low of this candle, or even we would use just the spread and then a penny under that bid, because hammers should go instantly, which we'll talk more about in future videos. Then we trigger the week up using this 5-minute hammer. You can see they go and do that. You get some exhaustion. They stop some people out. Nowhere near taking your entry here out, so you can hold because the day is in force. Now the week is 2 up. This 3-2 momentum hammer to the upside is a 3-2 reversal. That confirms what we know about the inside and up on the week. So we can take that to add to our position, because we are constantly looking for trades where we can continue to add. Because if we know where they're going based on your reversal magnitudes and continuation magnitudes, we know we want to be as long or as short as we can when it gets to that target, because they can keep going. So now let's talk about the simultaneous break. So combinations may also occur not just in various timeframes and setups in one stock, but across asset classes as well. So when the broader averages, key sector ETFs, and most stocks trigger actionable signals in the same direction, it's known as a simultaneous break. This one factor makes the flip so important. On each new flip, we can evaluate how many new potential 60-minute actionable signals have formed. And that's one of the 4 major timeframes, so it's important. Oftentimes, we'll see the simultaneous break across the SPY, DIA, IWM, and QQQ when they all go inside 60 at the same time. And once a few of those start to break their inside bars, we can expect the rest to follow suit. This may occur across the broader averages or be sector specific. By specific, we mean the sector ETFs, such as financials or energies, which we have great examples of those we'll cover at the end of this video from this week where we traded them. So oftentimes these will occur at the beginning of the week, month, or quarter. And the reason is because institutions are reallocating based on time. For example, at the beginning of the quarter, it's common to have simultaneous breaks as the institutions reallocate and trade extremely large amounts during this time. And we'll see the strongest stocks trigger first. And then that will trigger the ETFs to start moving. And then the ETFs will start putting upward pressure on the laggards, or the things that are lagging behind, to then trigger their upside signals. The stronger names that are already going up while this break occurs are likely to keep going, because there's no reason for them to reverse during that market condition. So now the measured move. Although highly correlated to other truths, oftentimes we look for actionable signals to trigger as a measured move. And this occurs when an actionable signal triggers after price makes a quick advance or decline. So in this example, we talked about this yesterday. DXCM, nice big strong move, hesitation, then the inside and down that triggers as a measured move of this move here. So we look for that to do the same size. And it's just projecting that previous move. So now let's talk about the importance of time. So although we will cover time in the next video, when actionable signals trigger is extremely important. Ideally, we want actionable signals to trigger as soon as possible. The reason for that is that it gives us more time to get reconfirming signals to enter or add to our positions. Since we know that actionable signals are only in force while the triggering bar is still open, the closer we are to the end of the time frame of that bar, the less time we have to work that signal and make some money. Turnaround Tuesday. So if you've ever heard of Turnaround Tuesday, in the markets, it is a combination negation reversal. And this is because all actionable signals will either confirm or negate what we know to be true about price direction. So Monday nights, inside days and rev strats are what cause this phenomenon. There are other setups that cause this to occur, such as the kicking patterns, but since they're not a universal truth and can't be quantified the same way that an inside bar and rev strat can, we are looking simply for inside days and rev strats. So for instance, let's say the market is up on Monday, such as the SPY, IWM, QQQ, DIA, and took out previous Friday's highs. Any ETF or stock that is formed an inside day on Monday were therefore too weak to rally with the market. So should the overall market give up some of those gains on Tuesday, suddenly all of the actionable signals on the weak stocks trigger the reversal break. And it is very important to remember that we do not have to catch every single signal as soon as they break. Although we enjoy when a combination of signals cause a multi-time frame break, our go-to buy and sell list would be all the stocks that have signals in force. This means is as long as the month is in force, we have the rest of the month to look for additional actionable signals on shorter term timeframes to reconfirm that break. This is also true for all actionable signals. If the triggering bar of an actionable signal is still live, we can look to trade it. Now, let's look at the historical significance of these signals and get to what's happening right now. We'll leave this up here if you want to take notes and go back over a summary, but that's all. So let's get into the charts. Now that we're at the charts, let's just look at some historical examples. And instead of going really back, we're just going to quickly look at one from this week that we posted to Twitter, all over the free Discord, and it was my contest pick for the Battle Options contest. So if we go to DVN, we're going to notice the 212 measured move on the week. And it does do what it's supposed to, makes new lows to that. So that's good. And you'll see inside week. So why are we looking at that? Well, first, it's an energy name. So what is the XLEs doing? Also inside week. And then what can that trigger? Because we want combinations. We don't just want the week signal. We want more than that. That can trigger the month. So we take the week to trigger the month and aim for the monthly magnitude using multiple time frame participants. So reaches to month magnitude. That's good. Why don't we short the XLE directly? Because on the higher time frame, since we've gotten a new quarter, this is nowhere near taking out last quarter's lows. So this is relatively strong. And then on a yearly time frame, this is nice inside year for next year to go 212 measured move, ain't it? So we want to know about things looking like that, such as, you can see Oxy. It's like that one's setting up 212 measured move. So now, why are we looking at DVN? Well, you can see the stark contrast here. And from the yearly time frame, nice and red. From the quarter time frame, notice how weak it is. It has shooter quarter inside bar compared to XLE, where it went 2 up last quarter. So this one was too weak to make new highs, which tells us it is weak by definition. And then we go to the month, and we see on the month, that was weak enough to go 3. If we compare that to XLE, XLE was 2 up in red. So it's potential 3, or potential these 2 bars outside of that. But DVN was weak enough to do that last month and just go 1 bar outside bar reversal. What else do we see then? So potential 3-2 on the month. Then the week triggers all of that to happen. So the week will trigger the 3-2 month, which triggers the inside quarter down with the Momo shooter, which triggers the 2-2 year. So now we have triggered the quarter, month, yearly participants using the weeklies. And anyone who bought last week is forced to sell. So that's what we're seeing here. And now the reason we do that is because we can then hold on to that position, understanding the quarter has 3 months left and understanding we've reversed the year. So even if next year opens, it can still go 2 down continuation and keep going to take this out. While the rest of the XLEs are too strong to even get near doing this. So we know if you bought DVN last year, you're having troubles because anyone that bought in this candle is now underwater for sure because we're below last year's lows. So that's an example from this week. Hopefully it gives you guys a great grasp on how we're doing this, at least between all the sector ETFs and what we're looking for. If you're looking for all the sector ETFs, you can Google SPDR sector selector and you'll get all of them showing up there for you. So I will see you guys in the next one and we'll cover a lot more stuff as